Welcome to The Explainer. Today, we're unpacking what I can only describe as a high-stakes financial mystery that's been absolutely rippling through the tech world. We're looking at a massive, incredibly rapid market wipeout. And over the next few minutes, we're going to dissect exactly how and why it all happened, step by step. So, let's jump right into the numbers.
Just take a second to look at the scale of this number. Over $200 billion. That's the amount of market value that was abruptly, and honestly, shockingly, wiped out across major software companies. Now, this wasn't some slow, gradual decline over a few years. Oh no. This was a sudden, violent drop that literally left the market reeling and had financial analysts scrambling to figure out what went wrong.
Section 1. The 200 billion question.
Okay, let's dive into this. What actually triggered an event of this magnitude? Well, almost immediately, the finger was pointed straight at Anthropic's Claude and its new plug-in ecosystem. But we really have to separate the flashy headline hype from the actual market mechanics. The myth that spread like wildfire was that Claude literally erased $200 billion all by itself. But the reality? It's entirely about human psychology and market dynamics. Investors reacted super aggressively to the mere possibility that unified AI systems could make the whole SaaS industry significantly less valuable. So the AI didn't actually destroy the money. The shifting perception of value did.
Section 2. The SaaS vulnerability.
To really understand the motive behind this massive investor panic, we've got to look at how software businesses actually make their money. Traditionally, companies rely on this fragmented software stack. You know the drill. They pay for entirely separate products for all their different operational tasks. You've got one subscription for customer support, another one for legal research, a totally different tool for document creation, another for workflow automation, and yet another for your CRM systems. For years, this has been an incredibly lucrative business model for software providers, simply because companies had no choice but to buy all these disjointed subscriptions.
Now, what's really interesting about this slide is we are looking at a complete paradigm shift. The real fear that started sweeping through the market was triggered by this sudden realization that a powerful AI assistant could perform basically all of these varied tasks, but inside one single interface. All of a sudden, that really complex, really expensive stack of different tools we just talked about, it's directly threatened by a unified, highly capable ecosystem.
Which leads us directly to the question that investors began frantically asking themselves in a total panic. If AI can do this directly, why pay for 5 different software products? Try to put yourself in the mindset of an investor whose portfolio relies heavily on that traditional subscription software model. If the fundamental need for multiple subscriptions just vanishes, the underlying value of all those separate software companies, it completely evaporates.
Section 3. Pricing. The future. Now, you might be wondering, if these AI tools are really just starting to roll out right now, how does $200 billion vanish before software companies actually lose a single paying customer? Well, it all comes down to market pricing. The stock market doesn't actually price companies based on what they're earning today. Stock prices are based entirely on expected future profits. Investors are constantly looking forward, right? If the outlook for tomorrow changes, the price of the stock changes today, instantly. Let's see how this exact psychology builds into a full-blown market sell-off.
This is the exact step-by-step logic that triggers such a massive market wipeout. Step 1, investors start thinking growth is going to slow down because AI is eating the market. Step 2, they realize, wait, customers might actually leave to use these new unified AI tools. Step 3, they deduce, okay, even if customers do stay, AI is going to totally reduce the software company's pricing power. And that leads immediately to step 4, sell shares immediately. They dump the stock way before actual revenue falls, entirely based on these changing expectations of the future.
Section 4. The DeepSeek Shockwave.
To prove this wasn't just some weird, isolated incident, we've got to look at a fascinating copycat case. In January 2025, a Chinese AI startup named DeepSeek released its R1 model. Now, this model achieved incredibly strong AI performance, but it operated at just a fraction of the usual cost. And this was a huge revelation. It caused investors everywhere to suddenly question whether the massive industry-wide AI spending that was driving up stock prices was actually even necessary.
And this brilliantly illustrates the sheer volatility of these market shifts. Because of that single release proving high efficiency at much lower costs, NVIDIA, who was pretty much the absolute darling of the hardware boom, lost roughly $600 billion in market value in a single day. Literally a single day. The shockwave of efficiency just completely rewrote future expectations overnight.
And the panic didn't even stop there.
Shortly afterward, roughly $1 trillion was wiped from U.S. tech stocks overall. We're talking about a massive, systemic technology sell-off that was triggered entirely by a breakthrough that forced investors to completely recalculate the future of tech spending.
Section 5. Software or a feature?
Okay, it's time to conclude our financial autopsy here and reveal the deeper truth causing all these violent market reactions. It's so much bigger than any single company. The market wasn't just reacting to Claude or to DeepSeek. It's the fact that whenever investors believe a rapid technology shift threatens future profits, stock prices fall extremely fast, even before the actual business impact is visible. It's that sudden, terrifying realization that the future outlook of an entire industry has been fundamentally altered. Just like that.
I want to leave you with this incredibly provocative quote, because I think it perfectly represents the much bigger question the market is really reacting to right now. What if AI becomes capable enough that many existing software products become features instead of companies? I mean, really think about that for a second. Entire multi-billion-dollar companies potentially reduced to just a simple feature inside a larger AI assistant. It's this exact existential question that's currently keeping investors wide awake at night and actively reshaping the future of the entire tech industry. Thanks so much for joining me on this deep dive. Keep exploring and keep asking the big questions.